$1.77 trillion. That's the market value a single company carried by the close of its first trading day this week. And it's the only number from the entire AI news cycle that actually moved capital. Strip out every model release headline that changed nothing, and this is what's left. A market verdict, settled in real dollars, not a press release. To see why one number reorders the whole AI race, you first have to know who everyone assumes is quietly running out of money to build the future. Here's the lens for the next few minutes. Forget the model release confetti. Watch three things instead. The supply of capital, the competition between the two labs that actually matter, and the trend lines running underneath both. Nearly every headline from the last 24 hours is just noise on one of those three axes. The signal is wherever real dollars changed hands, and wherever market share genuinely shifted. Everything else is marketing dressed up as breaking news, because the volume is genuinely absurd. In the last day alone, a leaked frontier model checkpoint started circulating in developer channels. A Chinese robot maker filed confidentially to go public. A coding tool shipped a new session branching command. And a government on the other side of the world committed $10 billion to artificial intelligence. 4 stories for continents, 1 news cycle. Most of it you will have completely forgotten by Monday morning. So let's do the exact opposite of your feed. Instead of stacking every headline at equal volume, rank them by the only metric that survives the week. Did money move? And did position change? Run that test, and the loudest stories of the night barely register. The one that actually mattered most opened on a stock exchange, settled in real dollars, and somehow didn't make half the front pages. Start here. This week, the most valuable company ever to go public made its debut on the Nasdaq, under the ticker SBCX. It priced its shares at $135, and the offering was structured to raise as much as $75 billion in proceeds. That makes it the largest initial public offering in recorded history, full stop. Not the biggest tech listing. The biggest listing of anything ever. At its listing price, the company carried a valuation of roughly $1.75 trillion. To put that in human terms, this single debut was priced larger than the entire market value of all but a handful of public companies on Earth. And the reason an AI breakdown is talking about a rocket company is simple. This listing is the market's first real, money-on-the-table referendum on the whole AI infrastructure thesis, because underneath the rocket sits compute, energy, and an AI segment that lost more than $6 billion last year on its own. The filing disclosed a cumulative loss north of $40 billion since 2002, against roughly $19 billion in revenue last year. Investors were not buying this year's profit. They were buying a bet on who gets to build the physical backbone of artificial intelligence itself. Now bring in the 2 names this channel watches most, Anthropic and OpenAI. Both have their own public listings teed up for later this year. One reportedly targeting October, and looking to raise $60 billion or more. Every one of them leans on the exact same thesis this rocket listing just stress-tested in real time. That public investors will fund a $1 trillion build-out long before it ever turns a single clean dollar of profit. So the real question hanging over this entire sector this weekend is not which model scores higher on some benchmark. It's whether the supply of patient capital is deep enough to feed every lab's compute appetite all at once. Anthropic alone just signed for up to 5 gigawatts of computing capacity. That is not a software line item. That is a power plant-sized commitment, and somebody somewhere has to actually underwrite it. Here's where it gets tense. A fresh index of actual business spending just dropped, and for the first time ever, Anthropic passed OpenAI in U.S. corporate adoption. Anthropic's share climbed to 34.4%. OpenAI slipped to 32.3%. The lab everyone still calls the underdog is now, by this one closely watched measure, the enterprise leader. That is a genuine position change, not a recycled headline, except the picture refuses to stay clean. A separate survey from a major research firm tells almost the opposite story. Only 19% of enterprises report extensive use of Anthropic's model, trailing both OpenAI and Google, with another quarter still merely evaluating it. Same week, 2 datasets, 2 contradictory maps of who is actually winning. The honest read is that the market hasn't decided yet. It's mid-fight, and underneath the adoption fight sits something stranger that almost nobody is covering. An accounting fight. The 2 labs count revenue differently. One books gross, the other books net, after paying its cloud partner. By one bank's estimate, more than $6 billion in partner payments hides inside that gap. So the next time you see 2 revenue figures screaming past each other, remember, they may not even be measuring the same thing. Strip the methodology away and the growth is still staggering. One of these labs reportedly pushed its run rate revenue past $30 billion, up from around $9 billion at the end of last year. More than 1,000 business customers now each spend over $1 million a year. That is arguably the fastest revenue ramp the software industry has ever recorded. And it's exactly why the trillion-dollar IPO math gets believed at all. But here's the part almost nobody flagged. The build-out isn't only American. In the last day, a humanoid robot maker founded just 3 years ago filed confidentially for a Hong Kong listing, already running a factory built to produce 10,000 robots a year. And it's only one of several. Rivals are reportedly chasing listings at $6 and $7 billion valuations. The hardware layer of AI is sprinting to the public markets too. So out of that entire firehose, what actually moved? When the rocket company's first trading day closed, the stock didn't drift sideways. It jumped roughly 25% above its offering price, settling near $169 and a market value close to $1.77 trillion. Read that again. The largest IPO in history priced sky high, and public investors immediately, hungrily, bid it even higher. That single green candle is the headline that reorders everything else. Because every AI lab planning to go public was watching this exact tape to answer one question. Will the public market pay up for an AI infrastructure story that loses money today on the pure promise of owning tomorrow? The answer that printed on the screen was an emphatic yes, and crucially, it printed in real, settled dollars, not in a slide deck. And it wasn't a one-day spike that quietly faded. Within a day, the stock was already being folded into major large-cap indices, with only a thin slice of shares actually trading freely. That mechanically forces index funds around the world to buy in, regardless of anyone's opinion. So you get structural demand stacking right on top of sentiment. The market didn't just applaud the debut. It locked it in, zoom out, and the capital signal is going global the very same weekend. A government across the Atlantic just unveiled a $10 billion national AI plan, aiming to train over 100,000 specialists by the end of the decade and reach 5 million citizens with AI literacy. Nation-states and public markets are now bidding for the identical future at the same time. Ambition was never the constraint. Capital was, and capital just said yes. So here's the one move that quietly set the tone for all of it. The decision to take that rocket company public right now, and the market's choice to bid it up 25% on day one, answered the question I opened with. Nobody at the frontier is actually running out of money to build the future. Public investors just signaled they'll fund the trillion-dollar AI build-out, which clears the runway for every lab lining up right behind it. Got an angle I missed? Tell me in the comments. Subscribe if you want me to keep digging into this stuff.